So my name is Natasha Knight. I am the HUD Certified Housing Counselor here at St. Martin Center. And thank you for joining us for our financial literacy course. And we will be covering your income and expenses and some budgeting tips, and hope you enjoy. So our first topic that we're going to cover today is your income and expenses. There will be a survey that will be available, pre-test and a post-test that will be available for you to complete. Section 1, we're going to cover income. So section 1, key takeaway, understanding your income, because that is the first step to using it to meet your needs. So what is income? Income is money that you receive. So what are some types of income? Income can be earned income, so that would be wages, income from assets or investments, so if you have any stocks or bonds, public benefits or entitlements that pay you money. So public benefits could be from the welfare office, if you receive any from Department of Human Services, like cash assistance, or if you receive the diversion, and other benefits or other entitlements and other income, Social Security income, VA benefits, child support, alimony. There's pretty much anything that you can receive money from can be considered income. Gross and net income. There's a big difference between gross income and then net income. Gross income is what you get before anybody touches it. So that's your total income without any deductions. And then your net income is going to be your gross income minus deductions. And deductions are going to be like if you pay for any medical insurance, any benefits that you might receive from your employer that they're taking out. And ultimately, your net income is what you have to save, share, and spend, also known as your take-home pay. So how you end up with your net income is gross income minus deductions equal net income. Garnishment. Garnishment, there's 3 different types of garnishment. There's wage garnishment, when they're garnishing your wages. Account garnishment is when they're taking it directly out your bank account. And a good example of that is if you had a bank account and you were over withdrawn, and then they just automatically take that money out of your account once you have the money in there. So that's account garnishment. And then Treasury Offset, I always say that you have upset the government in one way or another. And so that means that it could be that you owe back taxes, student loans, because that is federal. So if they take your tax return for your student loans, that's Treasury Offset as well. And also court-ordered child support or alimony is Treasury Offset as well, because the government has stepped in to receive payment for that individual. So, what are some ways you can be paid money? There's different ways you can be paid your income. You can receive your income in cash. You can receive it as a paper check. Remember, with paper checks, you do not want to sign it to endorse it until you are actually physically there at the bank or credit union or the place that you're cashing your check at, because if you sign it beforehand and you lose it, it is no longer as good as gone, because if someone gets it, they can still cash it. Direct deposit is the fastest and safest way to receive your income, because it's directly deposited into your bank account and you know that it's going to be there. And with some direct deposit, you can get paid a couple of days earlier, depending on the banking source that you're using. Payroll cards. Payroll cards are the cards that some employers have. I know a lot of the temp agencies use payroll cards. And then there's a couple places locally that use payroll cards as well. But that means that your employer just deposits your paycheck directly onto the payroll card, and you use it that way. Be mindful, a lot of the payroll cards do have fees attached with them, so even if you try to take money off or you use your card and swipe it, it's usually fees associated with that. Not all of them, but most of them. Electronic benefits transfer, the EBT, that's the little card that you receive from the state and to receive your benefits from, like the Department of Human Services, like to receive your cash assistance or your food stamps. Understanding pay statements. Typical pay statement information. So a pay statement is a pay stub, also known as a pay stub. So the typical information that you're going to see listed on there is going to be your personal information. Information identifying is your pay stub that you are actually looking at. So that's going to be like your name, your address, maybe the last 4 digits of your social. Pay period. So it's going to let you know the period that you're getting paid for. Pay date. So the actual date that you're getting paid on. And then it's going to have your gross pay. And remember, your gross pay is the pay that you receive before anybody touches it. So that should be the biggest number on there. And then you're going to see all your deductions. So that's going to include your taxes. It's going to include your Medicare being taken out. It's going to include if you have any deductions from your employer, all of that. All of that will be listed on there. And then your net pay is what you get to bring home. And then any employer contributions, if your employer is paying anything on your behalf, that's listed on there as well. And then also, usually you will see any paid time off. So if you get vacation, holiday, birthday, anything like that, that is typically also listed on your pay stub. So we're going to go over some deductions that is on pay stubs. So some required deductions are FICA, which is your Social Security and Medicare, income tax, which is your federal, state, and local, and then we have elective voluntary deductions. Those are the ones that you opt for. So like your insurance and premiums, if you opt to pay for insurance, union dues, retirement account contributions, charitable contributions, direct deposits. So then direct deposits or whatever you have in directly deposited into a bank account. And you can't have multiple bank accounts for direct deposit listed on your pay stub. So you can have your paycheck divided into more than one bank account. Okay, income tax withholding. Internal Revenue Service Form W-4, possibly state and local income tax forms as well. So if your exemptions equal higher withholding, more exemptions equal lower withholding, be careful not to have too little withheld. If the IRS find that you're intentionally not having enough withheld, you can get in trouble with them. So if your exemptions means that they're going to withhold a higher amount and then more exemptions equal lower withholding, so it really just depends on when do you want to see the most of your money. So if you want to see the most of your money during tax time, you're going to do fewer exemptions. But if you want to see more of your income during the year, you'll do a higher exemption. Okay? I do not encourage you to do like 5 or 6. Most people do anywhere between 0 to 3. So, if you have more than one job or a paid hobby, if you receive an IRS Form W-2, your employer considers you to be an employee. And if you receive the IRS Form 1099 MISC, miscellaneous, you're considered to be self-employed. It's important that you know how your employer considers you. Because in most cases, if your employer considers you to be self-employed, they are not taking taxes out. And that is solely your responsibility to make sure that your taxes is being paid. Okay? So, understand how you are being paid. And you may have to pay your taxes yourself. If that is the case, I encourage you to contact the IRS to make payment arrangements. and figure out how much roughly you should be taking out. And also consider putting the money aside for the future. So every time you get a paycheck, put some money aside. So once all that money is due, you do not have to scrounge up all of that money because you have been saving and putting money aside for it ahead of time. And then keep accurate records. Regardless if you're an employee or self-employed, keep accurate records. We're all human. We all are subject to error. So it's important that you hold on to your pay stubs. It's also important that you hold on to your tax returns. It is recommended that you hold on to your tax returns for 3 years if you're an employee, and I believe is 6 or 7 if you are self-employed. Tracking your income. So, how do you track your income? Well, first, you need to know what your income is. If it's regular, meaning that you get it on a regular basis, that means that you know that you get paid every Friday, or that you get paid every first of the month, or you get paid twice a month. However often you get paid, but you know that you receive it on a regular basis. So that's regular income. Unpredictable income. Unpredictable means exactly what that means. Unpredictable. You really cannot predict it. So maybe you do have a regular job, but maybe your hours fluctuate. So maybe you only know that you're going to get minimum 20 hours, but you can get up to 30 hours a week. So that's going to be unpredictable. And if you are someone in that case, I encourage you to try to get your budget based off of just the bare minimum hours that you know that you are guaranteed. So anything that is extra, consider it bonus money and that you can use to catch up on other bills. Unpredictable income also could possibly be child support or alimony, because you're at the risk of someone else making sure that payment is being paid. Seasonal income depends on certain seasons. Like right now, we're in the fall season, so with fall, farmers, and then seasonal also is going to depend on where you're located at. Up north, we know we get all 4 seasons, so we have more seasonal work. But down south, their seasonal work is going to differ from up here because they have a lot more warmer weather. If you have amusement parks and you work there, that's seasonal. If you're a tax advisor, you might not be working all year round. So you might only be working during tax season. One-time income, exactly what that means. One time. You're not guaranteed to get it ever again in life. If, let's say, you are finally awarded your Social Security income and they have to give you back pay. One time will they give you back pay. They're not going to give you extra money every year or every month. One-time income, the stimulus check that we have received from the government, that was one time. You're not going to continue to receive a stimulus check. So anything that you are only going to receive one time and possibly never receive again, that's one-time income, and it's really, you should not be relying on that. So we're wrapping up section 1. So remember, the key takeaway for section 1 was understanding your income, because that is the first step to using it to meet your needs. So we're going to move on to section 2, expenses. Section 2, key takeaway, understanding your expenses. This will help you decide how to save, share, and spend your income. So, what are some ways you can use your money? What do people do with their money? In the pictures, you see there's a father, it looks like. He's with a son and he's purchasing some clothes. So, we use our money to purchase clothes. We spend it on our family, our children. We have to take care of them. For rent, there's a for rent sign. So, we have to have housing. So, shelter. So, that can be, we're paying for an apartment. Maybe we have a mortgage, so then we're paying for our house, and then with those things come Utilities, you have to also take care of those housing expenses. So you have to have water, sewer, electric, gas, and then anything else that you may decide that you want to have, maybe cable, internet. And then third picture, looks like there's a couple. So once again, we're spending money on our loved one. They have a grocery cart full of groceries. So they're grocery shopping. We have to eat. So therefore, you have to spend money on that. Last picture, it looks like he's on a cell phone, which a cell phone is an expense. And then looks like there's a water leak in the ceiling. So once again, that's another expense. So that expense can fall on you or your landlord, depending on if you rent or you own. But either way, that's still gonna cost money. So someone's gonna have to pay for that leak in the ceiling. So it's important you think about how you use your money. When you think about how you use your money, think about it in 3 different ways: saving it, sharing it, and spending it. Saving, you see there's a little piggy putting a coin in there. The old-fashioned way, you can get a piggy bank and you can put your coins in there. Absolutely nothing wrong with that. There's other ways you can save. You can save it into a savings account. You can save it in a 401k. There's different ways that you can save money, but it's important that you're saving your money in some way, okay? Because you have to plan for the future. You never know what's gonna happen. Sharing it. You see, it's exchanging from one hand to another. So that is when you're sharing it with your family, your friends. Spending it, you see that there's a dollar bill and they're handing it to someone. So that's whenever you go to the grocery store, that's whenever you go to the clothing store, that's whenever you go pay a bill, you're spending it. Ways to think about your expenses. Think about it as needs, wants, or obligations. Needs are things that you must have to live. So what are some things that we need? We need shelter. We have to have somewhere to lay our head. We also need food. We have to live. That's the only way you're going to be able to live, if you eat. Wants are things that you desire but you can live without. So, although we need shelter and we need a roof over our head, we do not need to have $1,000 mortgage. That's our want. Maybe our budget says that we only could afford a $500 mortgage. So if we get anything higher than that, that's a want. Yes, we have to eat, but we do not have to go to Red Lobster every weekend. That's a want. Eating out is a want. It's not a necessity. You just have to eat. That's all you have to do. But anything outside of that is just a want. Cell phones. Yes, some people do have to have a cell phone, so that could be a need for someone. But it's a want when you go purchase every new cell phone that comes out every 6 months. That's a want. You don't have to upgrade your cell phone every 6 months. That's something that you just want to do. Cars. Yes, that could possibly be a need, but it turns into a want when you cannot afford that car payment and you get it anyway. Or you see that the 2019 Cadillac Escalade came out. Okay, that's fine. It's nice, but you don't need it. That's just a want. If your budget only say you could afford the 2011 Cadillac Escalade, just stick with the 2011 Cadillac Escalade until you can actually afford the 2019. Okay? Obligations are debts that you owe. So obligations can overlap into these categories because debts are that you owe can be an agreement that you have verbally or written agreement with someone. So shelter. So if you have rent, you have made an agreement with the landlord that if they allow you to live in their property, that you're going to pay them a certain amount every month. That's an obligation, but it's also a need because you obviously need to live somewhere. a mortgage, an obligation, because you have signed a legal document with the mortgage company that you would pay a certain amount to end up owning that home. So it's also an obligation. Obligations can also be if you have any agreements with the court systems or Internal Revenue Service. Obligations can also be if you have court ordered child support or alimony, and honestly, it doesn't even have to be court ordered. Even if you just made a verbal agreement with that other person that you were going to pay a certain amount each month, that's still an obligation. So, when you really think about it, can you find less expensive ways to meet your needs? Yes. You could shop around. Can you use less money for your wants? Yes. Once again, you could shop around. And can you negotiate lower payments for obligations? Usually, yes, you can. Not all the time, but it never hurts to ask. The worst they can do is say no. So it's better to ask and be turned down than not to ask at all. If you don't know, ask. If you receive any public benefits are anything that you receive from the state, or you could receive from the government in any form, pretty much. So public benefits can be your Social Security benefits. It can also be VA benefits. It can also be the benefits that you receive from the state, cash assistance, or food stamps, or if you receive the diversion, any of those benefits. So if you receive any of those benefits, learn about the resource and asset limits, because they are going to ask you questions about all the resources and assets that you have available to you. They're going to ask you, do you have a car? Do you own any property? They're going to ask you all that because they're trying to determine your resources and assets so you don't exceed those limits they have set. And if you have any questions about what the limits are, you can always contact them and ask them what they are. Monitor how you're spending and saving affects those countable assets. Sometimes you're only allowed a certain amount inside of a bank account. So ask them, how much savings are you allowed to have inside of a bank account? Use your income in ways that's going to avoid exceeding those asset limits. So make sure that you're paying your bills every month. So you could be able to prove that the income that you're receiving and the money that's sitting there is not just sitting there, that you're actually using that to pay off something. Tracking your expenses. It helps you understand if you are using your money in line with your values and goals. So it uncovers where you can make some necessary changes, and it can help you ultimately spend less. It's very important that you track your expenses. I encourage you to track your expenses. Some people track them on a daily basis, so they collect receipts every time they go to a store. Some people sit down once a week or once a month and actually have an Excel spreadsheet, QuickBooks, anything like that. With technology that we have available to us nowadays, we're able to use our smartphones, and they have apps to help you track your expenses. So it's important that you do track your expenses because it ultimately helps you understand where your money is going. If you're actually spending it on things that you need, or it's things that you just want that you're spending your money on. And then you can make the necessary changes so you can ultimately be able to start saving, sharing, and spending wisely. So, managing your expenses. When you manage your expenses, it helps you avoid those late fees. You see that big old past due sign right there, past due. Those are extra money that you're giving the people that you have fell behind on. So when you don't pay your bill on time, that late fee might be $10. That extra $10 that they just added onto that account starts to add up. So $10 this month and $10 next month, that's $20 that you then gave them extra free money that has been added onto your account. Interest on unpaid balances. So when you don't pay something off fully and you get interest accrued on there, that's also extra money that you're giving them. So if you have a credit card that you do not pay in full and they're gonna add interest on there, so then you have interest, and then let's say if you pay it late, so then you got an extra late fee. So therefore, what started off as maybe a balance of $50 that you owe them, now you're up to maybe $100 because they added an interest and late fees. So you have to be very mindful of that. Also, negative credit report entries. A lot of places do report on your credit report. Credit card payments. You missed that credit card payment? Yes, they're gonna let the credit bureau know that you did not pay. You missed a mortgage payment? They're gonna let the credit bureau know. You missed that car payment? They're gonna let the credit bureaus know. All those little late payments start to add up and your score will drop. One late payment can drop your score up to 100 points on certain accounts. So it's very important that you make your payments on time and full and stay in contact with the creditors that you owe money to, so you can try to avoid getting late fees, getting that extra interest, and getting those negative credit report entries. Loss of services. You miss a payment on your electric bill and they threaten to shut your service off. Or if you miss your car payment, they threaten to take your car. Loss of services. Sometimes you absolutely need those services. Maybe you need that car to get back and forth to work. So if you don't have your car and your employer says that it's mandated that you do, you can lose your job. So now your whole life is being affected. It's not just one thing, it's a domino effect. Additional charges associated with the loss of service. So now they can took your car away, so now you're trying to get your car back, so they want some additional money, and that's already in addition that you got late fees that's already added to the account, interest that's added to your account, and a negative credit report entry. It's a whole domino effect. It affects you in more ways than just one. So it's very important that you are mindful of this and know this. So if you can possibly avoid it, do so at all costs. Ways to pay your bills. You can pay your bills in person. You can go to the store. You can pay them by mail, snail mail, the old-fashioned way. You put it in an envelope, you send it in the post office. Electronically, you can go to the financial institution to pay it. You can do it on a website, a credit card website, through the entity you owe the money to. A lot of the places like your Penelec, National Fuel, Erie Waterworks, they all have access where you can go online to make your payments. Bill paying service. Or you can do it via mobile app. Some of them have apps where you can actually pay it that way. Or if you have your bank account set up that way, you can automatically have your payment to go to that entity automatically right out your bank account. You can set that up via mobile app. So, wrapping up for income and expenses, section 2 key takeaway here was understanding your expenses, because that's going to help you ultimately decide how to save, share, and spend your income. So now we're going to continue on to our second part of your spending and savings plan, also known as a budget, the fun stuff. So, making a monthly spending and savings plan. Section 1 key takeaway is using the monthly spending and savings plan to guide how you use your money, how to budget your money. So, some key blocks of a spending and savings plan is comparing your income and expenses. You remember previously we talked about our income and we talked about our expenses. So, when you're considering your income, make sure you use your net income. When doing a budget, you want to use your net income. You do not want to use your gross income, because that is not the money that you are bringing home. Your net income is. So you're going to use that amount of money that you are bringing home. And then, as I previously have mentioned, If you are someone that your income sporadic is unpredictable, try to come up with a predictable or a regular amount that you know that you are going to get. And that's going to make it a little easier for doing a budget. But if you still have problems or struggles with understanding how to do so, you can feel free to contact our office. And I would be glad to discuss that with you. And the number is 814-452-6113, extension 223. And I'll be able to talk to you and see how we can come up with a regular amount to make it a little easier for you to come up with a budget. And then your expenses. You want to make sure that you are covering everything, not just your rent, electric, gas, but all those other expenses. So if you're someone that eats out often, maybe you need to put a line in your budget that you eat out. Or maybe that you have children. Put them in your budget because you're spending money on them. Maybe you have some other extracurricular activities. Whatever you're spending your money on a monthly basis, on a regular basis, account for it in your budget, because that's the only way that your budget is going to be realistic and work. And it's going to help you understand where your money is going when you sit there and you look at it and you say, well, you know what? I'm going to Country Fair every morning buying me a breakfast sandwich and a cup of coffee for $5. Well, guess what? That $5 that you just spent 5 days this week equals $25 for this week, and multiply that by 4 weeks out the whole month. You just spend $100 on just coffee and breakfast sandwiches. Very expensive. Okay, so then you could sit there and say, you know what, maybe I could start making breakfast sandwiches at home, making a cup of coffee at home. That's an adjustment. And so guess what? You have decreased your budget by $100 now. And maybe now you're only spending $25 because you bought the stuff to make the breakfast sandwiches at home, and you brought the coffee to make at home as well. So $25 versus $100 a month on something. I think $25 work out very well, and then you can use the extra $75 to spend on something else. So when you're sitting there doing your budget, it allows you to start thinking more openly of where you could start making some necessary adjustments, decreasing some expenses, or even possibly maybe you need to increase your income. And we're going to discuss that a little further. So when you fill out your spending and savings plan, you're going to have 3 sections. First section, your net income, as I had previously mentioned. Then you're going to have your expenses. You're going to list everything that you're spending your money on, and then you're going to compare. And when you compare, you're going to end up in one of 3 different situations. One, you're going to end up with a zero balance. If you end up with a zero balance, it means your income equals your expenses. You're breaking even each month. Not bad, and it's not good either. Positive means you have more income than you have expenses. That's the ideal place that you want to be, and that's a very good situation to be in, because that means that you have a surplus of money. Then the third situation, it means you're in the negative. Not good. Bad place to be, because that means that you're spending more than that you're actually bringing in. And then therefore, you need to take action immediately. So, some daily and weekly ideas on how to save, share, and spend. You can record your saving, sharing, and spending on a daily basis. Some people write it down, some people collect the receipts, some people have apps on their phone that can help them do this. Some people collect their change on a daily basis. They empty their pockets and just collect their change. Really think about it. Is there anything that you possibly can do or already do to save, share, or spend on a daily basis? I'll use myself as an example. On a daily basis, whenever I use my card, because I'm a card swiper, I get alerts on my phone. I get text notifications, and I'm also able to go into my mobile app for my bank account to actually check my balance as well, so I check that daily. So maybe that's something that you could possibly do if you're not already doing so. Weekly ideas. Envelope system. The envelope system is a tried and true system that a lot of generations had used before computers and everything had came out. So what they would do is have a bunch of envelopes. They would title them with each bill that they pay, put cash in them, and then as they paid their bill off, they use the money that's inside of there. So once that money is gone out that envelope, that means they're done with that particular thing for the month. And hopefully, when they took that money out, that they actually did pay the bill that they were supposed to pay. Weekly money check-in. Maybe they have a partner. Maybe they sit down with their spouse on a weekly basis. Or maybe they have a financial accountability partner. Or maybe they have a friend. Or maybe they have someone that they just sit down with on a weekly basis and go over their budget. And just discuss what they had done for the week. If they were able to save. Or maybe they had slipped up. Or maybe something unexpectedly came up, and so then they had to use that money to use it somewhere else. And so now they're going to take the opportunity to sit down with someone and discuss maybe what they can do next time in the future to possibly avoid it, or what they can do to fix that situation. I do encourage you to at least sit down, if not once a week, at least once a month, to actually sit down and work on your budget. It does not have to be this long drawn out process that some people believe it is. It really doesn't have to be that way. Some people use a calendar system. As you can see, there's a little calendar right there. And so then they just have a goal for the week. Some people, maybe they have a goal, maybe rather than eating out every day for that week, they're gonna say, you know what, I'm gonna try to cook a new recipe at least twice a week. By cooking that new recipe twice a week, guess what? They're saving money rather than going out to a restaurant and eating out. And then that's a way to start saving money and being able to use your money more wisely. Monthly ideas. Conduct a monthly review. And that can be sitting down, just looking at your budget and review what you have done for that whole month. Have a monthly goal setting session. I encourage everyone and every family to set goals for their household and for themselves. Have something that you're trying to reach for. Maybe your ultimate goal is to purchase a house, but take baby steps. So your ultimate goal is to purchase a house, but you have to save some money. So maybe your monthly goal is to save $100 every month so you can have a nice down payment or money saved up for your closing costs. Or maybe you need to get a new car. Or maybe in a couple of months, we're going to be hitting Christmas. That's where a lot of people find themselves in a whole lot of financial trouble, because they take their whole December paychecks and then go crazy trying to spend for Christmas. But set monthly goals to set some money aside to start buying Christmas gifts at the beginning of the year, so then at the end of the year, you're not worried about trying to come up with all that money. Also, celebrate the successes. If you reach a goal, celebrate, but you do not have to break the bank to do so. So by celebrating, maybe you have saved that $100. Celebrate. You don't have to go break the bank. So maybe you go and buy yourself a pizza. Cool. You didn't spend the whole $100 on a pizza, and you're able to celebrate. It's okay to celebrate. You worked hard for it, but you just don't have to go crazy while doing so. Prepare for taxes. So tax season comes around and people get happy because they have some extra money. Sure, it's nice to have that extra money, but that extra money is not going to be around all year. Okay, you're not going to get it all year. So prepare ahead of time. So if you know that you're going to get a tax return back, prepare ahead of time. That you're actually going to get a tax refund back, not a return. a tax refund. I need to clarify that. So that you know that you're gonna get a tax refund, prepare ahead of time. So maybe you know that you need to get new furniture. So make goals. When I get my tax refund, I'm gonna buy new furniture, or I'm going to put some money in a savings account, or I'm going to pay off some debt. Plan ahead of time. Don't just get the money and take it to Walmart and then spend it on a cart full of stuff that you don't need. That's not wise. Some other monthly ideas. Some people sit down once a month with the whole family and discuss what needs to be done for the next month. There's various different things that you can possibly do on a monthly basis as well, just to set some goals and prepare for the following months. So, increasing your income. Increasing your income, it can help you cover expenses, save, or share. So, selling something. Let's say you have stuff sitting up in your attic. And then let's say you have, I don't know, you have an old TV sitting in your attic. Okay, sell it. That's increasing your income one time. Granted, it's not guaranteed that you're going to be able to have a TV sitting up there every month, but you know what? That extra $50 that you just made by selling that TV that's sitting there, that's the extra $50 that you did not previously have. Occasionally, during the summer seasons, people have garage sales. And you put your stuff out there on the yard and sell it. Hey, it helps clear out your house and get rid of the stuff that's just sitting there collecting dust. And it also gives you a couple extra dollars in your pocket. Some people go to like Plato's Closet or Once Upon a Child, those different type of places, and sell those things also. That's some extra cash as well. You're getting rid of the extra stuff that's sitting around the house and getting a couple extra dollars. Ongoing. Some people pick up a part-time second job. Nothing wrong with it. If you have the time and you're able to, find an extra job. You can do that. That's no problem. Long-term. Workforce development. Find a new career. Find a new career. Find a new job. Go back to school. That's long-term. That's investing in yourself so you can be able to increase your income over the long term. What are some other ways that you can increase your income? As I have throughout there, if you have stuff, you can sell it at like Plato's Closet, different things like that. Maybe you're good at something. Everyone's good at something. Use it to your advantage. Maybe you know how to craft. Make stuff. Sell it. A couple extra dollars. It's not guaranteed, but it's a couple extra dollars that you didn't have previously. And I do not encourage you to do anything illegally. Decreasing expenses. Think about your needs, wants, and obligations. Remember, we already discussed what our needs are, our wants and obligations. Needs are things that we must have to live. Wants are things that we just desire, and obligations overlap into needs and wants. And those are agreements that we have made with someone. So, decreasing our expenses. Conserve. What can we get cheaper or use less of? So when you think about it, think about all the things that you're spending your money on, and then think about it if you're able to get it cheaper or use less of it. So maybe you like to shop at Wegmans. Prices might be a little more expensive, but so maybe you need to shop at Aldi's instead. You might be able to still get your same produce, but just at a cheaper price. Nothing wrong with it. Or maybe you're someone that leaves all the lights on in the house. So you're using this astronomical amount of electricity. Well, if you start turning lights off when you're not in the room, you can use less electricity, which then decreases your electric bill. Just think about those little things, what you can do. Think about what you can adjust. or which you can renegotiate on. So maybe you have a car payment. You can always call your car company up and ask them. Try to renegotiate and see if maybe you might be able to get a lower car payment, or maybe you might be eligible to refinance. Before you try to do something like that on refinances or anything like that, make sure that your credit is in the position to do so. Otherwise, it's just only gonna hurt you in the long run. And then think about what you can do without, what you can eliminate totally. Maybe you don't need that biggest cable package. So maybe you can downgrade or get rid of cable altogether. So you just really have to think about your needs, wants, and see exactly what you can do to conserve, adjust, or do without totally. So section 1, key takeaway here was using a monthly spending and savings plan to guide how you use your money. As I previously mentioned, is how to use a budget. Section 2, when money is short, which happens to everyone. Section 2, key takeaway, prioritize which bills to pay first. When money is short, you have to prioritize. You have to decide what is more important. And by doing so, you need to think about your household and not think about the next household. Because what your neighbor is doing to prioritize their bills might not work for you. So how does money run short? Well, simple. Even with careful planning, money can and will run short. Happens to everyone, as I had previously mentioned. But you have to have a game plan going forth. So what can you do? You can increase your income. We talked about how we can increase our income. We have talked about how we can decrease our expenses. So we talked about how we can make some adjustments, renegotiate, downsize. Next thing, contact your creditors. Contact the people that you owe money to. Contact them. Do not be afraid to call them. They are not mind readers, okay? Contact them. Let them know what is going on in your household. If all you're doing is pressing do not disturb, or sending them to voicemail, or just blowing them off completely, they know that's what you're doing already. So talk to them. Let them know why you're blowing them off. Let them know, I don't have the money this month. Maybe you were laid off because of this COVID that's going on. Let them know. They have put plans and programs in place to help people that run into financial troubles. But they can't offer you those things if you don't talk to them. So it's very important that you talk to your landlord. It's very important that you talk to your mortgage company. It's very important that you talk to your car company. It's very important you talk to the credit card company. It's very important that you talk to your electric company, your water company, your gas company. It's important you talk to these people so they can offer you the programs that are there to help you. And it's nothing wrong with reaching out for help. You can reach out to the 211 through United Way, and they have this program set up, and they can give you all the resources that's available to you in your community. And you can reach out to local agencies like our office, as well as others, and see what's available out there in the community to help you. And then ultimately prioritize what to pay first, because at the end of the day, all the programs in the world is not going to be there forever. So you still need to be able to budget and know what you need to pay first. Okay? So prioritize on might happen. So you have to think about it as cause and effect. You have to think about, if I do this, what's going to happen next? Remember, I was telling you, when you make a late payment, then there's a domino effect because a lot of other things happen. Well, that's why you need to prioritize what might happen if you don't pay that bill. So make your choices about which bills to pay in full, pay partially, or pay late. Pay attention to the consequences, that if it's going to prevent you from being able to earn your income, let's say you have to work your 9 to 5 because that's your only source of income. Well, you're going to want to make sure that nothing that you stop paying is going to affect you from having your income. So if that means that you have to make sure that you pay the co-payment for the daycare so your children can still go to daycare, pay it. If it means that you have to have a car, then you better make sure that you still have that car. Jeopardize your shelter. If it's going to jeopardize a roof over your head, pay it. So pay your rent, pay your mortgage, pay your gas or electric. Is it going to impact the health or ability to live independently? If you stop paying, are you going to end up in a hospital because you didn't pay for your medication this month? Some people are on life-threatening medications that they have to have every month. So I would encourage you to make sure that you still can get your medication each month. That's a priority to you. Or if you get kicked out, and you have to live in a shelter, maybe you living independently is a necessity to you. Maybe you have health issues where you can't be around large groups of people. Guess what? So maybe you want to make sure that you do keep your shelter so you can live independently and not have to worry about being surrounded by other people. Or is it going to result in the loss of assets? So are you going to get foreclosed on? Are you going to lose your car? And in some cases, if you get your electricity cut off, your gas cut off, your water or sewer cut off, guess what? And you have children in your home, your children can be taken away. So those are things that you have to think about. What's going to happen if you don't pay this bill ultimately? So section 2, key takeaway here was prioritizing which bills to pay first when money is short. So this concludes our class for today, but I do want to encourage you to really sit down, take a look at your income, expenses, and ultimately come up with a budget that's going to work for you and your household. All the information that I have provided to you today did come from the Money Smart program that is found on the FDIC website. And I believe it's fdic.com, but we'll put that link down in the notes so you can also have that available to you. Thank you for joining us today. And once again, my name is Natasha Knight. I am one of the certified housing counselors here at St. Martin Center, and my contact information is 814-452-6113, extension 223. Thank you. Have a great day.